Hi friends, welcome to Konexio Technical Insight. I am Rahul Randeria. I would be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns, Nifty, Bank Nifty, as well as on the different asset classes. Now, first of all, let us discuss what we have mentioned in our last video. In our last video, we have mentioned that the markets were oversold. It was not advisable to go short at the lower levels, and we might see some sort of technical pullback from the lower levels. So we had a view regarding a buy on dip strategy, as well as it was a monthly expiry. So we had a view that market might remain positive, but with a huge volatility. So market would trade in this particular manner, and exactly according to our expectation, market behaved in on the similar lines. But on Friday, due to the weak sentiments around the globe, we have seen that the markets had corrected in the fag end of during the trading sessions and ended on a negative note on the daily basis. But on the weekly, the charts seems giving some sort of support coming in at the lower levels, or what we can say, the traction coming in at the lower levels. So now, first of all, let us go to the Nifty daily charts, and we will try to figure out what is the trend over there, how the charts are panning out, and what could be the direction or the market trend for the next week. Now, this is the Nifty daily charts, which we have been mentioning. It was a rising channel. Nifty has been moving, making higher tops, higher bottoms. Last Friday, we have seen that Nifty had ended or closed below this particular rising channel. But as we said that the setup was oversold, you can see RSI down in the oversold area. We were expecting a pullback. Market did bounce throughout the week, but on Friday we have seen that around 18,250 or 18,260 mark, we have seen some sort of profit booking coming in or some sort of exhaustion coming in at the higher levels. So on weekly, on daily charts, it seems a little weak, but let us go and check what is the pattern form on the weekly basis. As you can see on the weekly basis, this is an inside candle, what we call it an inside candle. This is last week candle. This was the last week of the calendar year. This was a week candle prior to the last week, and it has traded in that particular inside the week of the last week's last to last week the range of particular whole 5 trading sessions. So looking at this particular pattern, we feel that on the downside, 17,777 could act as a major support. If it breaks, then only one should go short at below those levels, because we feel that market might consolidate here. Some sort of pull off cannot be ruled out, because on Friday we have seen a weak candle. So of this counter rally, we might see some sort of cool off from this particular level. But up to what extent the cool off would be seen, that we will discuss in the option analysis. What could be the support area, looking at the option data, and once we study you know this particular support and resistance levels, we will try to figure out what could be the important support at the lower levels. Now let me just go through the international markets, or specifically the Dow charts. This was the Dow Jones, and it has been moving in this particular range. You can see here, this is the daily chart, this is the weekly charts. Again, weekly charts on the Dow Jones seems to be an inside week candle. uh, Weak inside week doesn't mean that the candles are weak, but that it means that it has traded in its previous week's range. So on the Dow Jones, uh, on the upside, 33,437 would act as a major resistance. If it breaks those levels, then Dow Jones might start rallying upside. So as of now, it is in a consolidation range. You can see last 2 weeks it has been moving in this particular congestion range. So this is the range, a higher resistance area, which is 33,437. If it breaks, then we might see Dow again testing the levels of maybe 34,800 on the upside. So as of now, we need to wait for Dow Jones to break this congestion range. So most precisely, on the upside, 33,480 should be the breakout point, and on the downside, 32,560 could act as a major support area. If it breaks, then Dow Jones might slide further. So we need to watch out for this either side breakout, and then one should take a directional call. Now for 2023, for the year 2023, I would like to uh, uh, give a view on gold. What could be the trend in the gold? You will see on the daily charts. This is the chart of gold. You can clearly see gold has formed or have given an inverse head and shoulder breakout. This is the left shoulder, this is the head, and this is the right shoulder. It has already given a breakout. So looking at this particular pattern, we feel that a target for gold in dollar terms for the year 2020, calendar year 2023, would be uh, 2023. A target is 2023, so almost $200 upside from the current levels. Currently, the gold spot area, the closing of the gold spot segment is closed around $1,822. So we feel that for the year 2023, I mean to say for the calendar year 2023, gold might test the levels of 2023. So anybody who wants to invest can accumulate gold on corrections for an upside target of 2023 in the year 2023 for long term. So now let us get back to our domestic markets. Now let us discuss the important supports and resistance level in Nifty for the next week. The important support in the Nifty for the next week is around 17,922 is the first support. Below that, the second support is around 17,777, which was the swing low, almost 17,777. And third support is around 17,630. On the upside, the first resistance is around 18,265. Above that, the second resistance is around 18,345, and third resistance is around 18,473. So these are the important supports and resistance level in Nifty. Traders should try to follow these levels and then trade in the direction of the breakout. So now let us go to the option data. We'll try to study Nifty option data, and we'll try to figure out what could be the important supports, what could be the important resistance, and what could be the trend for the next week. Now this is the data of Nifty calls. In Nifty calls, the action was seen in 18,200 calls, then 18,300, 18,400, and 18,500 calls, and almost 18,600 calls also. Here you can see there has been rise in the open interest, rise in the volumes. There has been a drop in option premium. The drop is not that much significant. That was only because of, you will see the sell-off on the Friday or the last second of the week. Implied volatility is also in comfort zone. So low implied volatility indicates that the undertone of the market is as of now bullish from these levels, but that doesn't mean a further cool off cannot be ruled out. So we need to watch out for. So from these levels, we feel that on the downside, on the upside, the major resistance could be 18,300 and 18,200. Once these two levels are breached, then we might see Nifty inching towards the level of 18,600 in the coming days. So as of now, on the upside, looking at this particular data, we feel that smart money might have uh, tried to write this particular out of the money calls, maybe 18,300, but that particular volumes is not giving, implied volatility is not giving that much comfort zone. So maybe slight cool off cannot be ruled out, but as of now, the major resistance would be 18,300 of the upside. If it breaks decisively supported with strong volumes, then we might see Nifty inching towards the levels of 18,600. Now let us discuss the Nifty puts. You will see on the screen that in Nifty puts, the action was seen in 18,000 puts, then 17,900 puts, 17,800 and 17,700 puts. Now here also you can see there has been rise in the volumes, shedding of open interest, rising of open interest, implied volatility is still low. It is between 11 and 12.83. There has been a minor drop in option premiums. So looking at this particular data, we feel that, and looking at this volume concentration, we feel that on the downside, immediate support would be 18,000. You can see the volume congestion, and on 18,000 puts, you can see there has been a shedding in the open interest. Shedding in open interest means that those who might have done put writing prior to expiry of January series, of the first week of January series, might have started booking some sort of profit, because there is some sort of shedding seen in a Nifty puts of 18,000 strike rate. So as of now, we feel that 18,000 could act as a major support. Then if it breaks, then Nifty might drift down to the levels of 17,800 mark. So most probably we feel that next week again Nifty might remain in the range of 17,800 on the downside, and as I said on the upside 18,300. But looking at this particular or studying that chart and studying the option data, we feel that the strategy should be buy on dips. So if Nifty maybe take support around between 18,000 to 17,900, that should be the area to go long at the lower levels. And on the upside, if it breaks 18,300, then we might see the extension of rally towards the levels of 18,600. Again, I would like to say primary trend of the market is still bullish, but as of now, look for weekly. For the trend for next week, we feel that Nifty might remain in the range of 17,800 on the downside and 18,300 on the upside, and strategy should be buy on dips from these levels. Now, friends, let us come to the charts of Bank Nifty, and we'll try to study the Bank Nifty charts. We will try to figure out the trend for the next week. Here also Bank Nifty, you can see it is still in this particular rising channel. For one day it breached this rising channel, it closed below that particular level, and again it has just pierced into this particular channel, rising channel. So again in Bank Nifty also the primary trend is still positive. But looking at this Friday's candle, it is an inside day candle. Looking at this Friday's candle, we feel that a further cool off cannot be ruled out from these levels. That cool off could be minor, maybe for 1%, 1.25% from these levels, but that should be used as a buying opportunity. But to be precise or to find the support area, we will just try to analyze the option data, and we'll try to figure out what could be the major support in Bank Nifty from these levels. So looking at this particular chart, we feel the primary trend is still intact. On the daily charts, on the weekly, just we'll have a view what is, again here also on the weekly charts, it is an inside week candle. So the bearish trend could be seen only if Bank Nifty breaks 41,597 on the downside or 41,560 on the downside. So these are the two supports area. If it breaks, then only we might see a bearish trend in Bank Nifty, which could take Bank Nifty further down if that particular area is breached decisively. So looking at this particular charts, we feel again Bank Nifty might cool off further from these levels, but that cool off might bring in support at the lower levels. So now let us discuss the important supports and resistance level in Bank Nifty for the next week. The important support in the Bank Nifty is placed around 42,833 is the first support. Second support in the Bank Nifty is placed around 42,489, and third support in the Bank Nifty is placed around 41,970. Whereas on the upside, the first resistance is around 43,290. Above that, the second resistance is around 43,614, and third resistance is around 44,151. So these are the important supports and resistance level in Bank Nifty. Traders should follow this level and watch out how the prices are behaving at near these levels, and then trade in the direction of the breakout or direction of the primary trend. Now let us try to study the option analysis of Bank Nifty calls and puts. You will see on the screen Bank Nifty calls. The action was seen in 43,200 calls, then 43,500 calls, and 44,000 calls. And up to a certain level of even you can say 44,200 calls. Now here you can see the volumes are rising, open interest is rising, implied volatility is in comfort zone but still rising somewhat. It is between 15.22 to 15.37, but there has been a sharp drop in the option premium. So again, as I said, looking at the charts and looking at this data, smart money might have done some sort of strong out of the money call writing. Maybe 43,500 was the strike price where we have seen the writing. Even in, you can see 43,300. Looking at the volume concentration, so 43,200, 300, 43,400, and 43,500. These are this particular four strike prices where we have seen strong writing of out of Bank Nifty out of the money calls. So most precisely looking at this option, we feel that 43,500 could act as a major resistance. If it breaks, then we might see extension of rally towards a level of 44,000 to 44,200 on the upside. So looking at this data, we feel that some sort of cool off from these levels cannot be ruled out. Now let us discuss what we have observed in Bank Nifty puts. You will see on the screen. In Bank Nifty puts, the action was seen in 42,500 puts, then 42,000 puts, 41,700 puts, and even you can see 41,500 puts. Now here you can see there has been rise in the volumes. Open interest is also rising. Option premium, I mean to say the premium of puts has corrected slightly. Implied volatility is between 14.89 and 16.74. Now looking at this particular data, we feel that on the downside, 42,500 could act as a major support area. If it breaks, then Bank Nifty might drift down to the levels of 42,000. But looking at this particular strike of 42,500, we feel that this could act as a major strong support area. And looking at the whole data of Bank Nifty calls and puts, we feel that Bank Nifty also might trade in the range of 42,500 on the downside, and on the upside it might be 43,500. This 1,000 point of range could be the trend deciding level for the week if Bank Nifty breaks either side of either 50 to 42,500 on the downside or 43,500 on the upside. Then we might see a clear directional trend in the Bank Nifty. So looking at the charts of Bank Nifty and looking at or studying the option data, again we feel the primary trend is positive, but at least for the next week, buy on dips should be the strategy in Nifty and Bank Nifty. And as I said, we might see some sort of cool off from these levels, but that cool off should be used as a buying opportunity from these levels. So friends, now let us come to the final segment of our show, which is positional call. I have identified one stock, mid-cap stock. The name of the stock is Hikal. Let us go and study the charts. This is the daily charts of Hikal. You can see the stock has corrected significantly from the highs of 742 till 200. So almost it has corrected more than 60%, 60 or 65%. After making the bottom of 200, almost 200, slowly and gradually the stock is trying to make bottom you can see the price volume action. After making this bottom, the volumes are rising and the price is also moving high in this upward rising channel, making high tops, high bottoms. RSI is also rising from this particular level. On Friday, we have seen a sharp rise in the volume. It has given a breakout. So definitely the stock is giving an indication of a trend reversal. So this could be the stock for long-term investments. Uh, investors, swing traders, or long-term investors can watch out for this stock. Currently, the stock is quoting around 410. So from these levels, investors can accumulate the stock on dips to 395 for an upside target of 460 to 470 for long term. This is not a trading stock, it is an investment stock. So definitely those who are willing to invest positionally or for long term or short to medium term should accumulate uh, on dips to 395 for an upside target of 460 to 470 for next 10 to 12 months or more than 10 to 12 years. It might give more returns in next more than 12 months. So definitely this stock should be kept on radar for long-term investments. So friends, thank you very much for watching the show. Any suggestions you can give into the comment box, and have a happy and prosperous new year 2023. Thank you.